Life insurance in the United States is not about fear. It's not about expecting the worst. It's about preparing for reality. In America, many people buy life insurance at a young age, not because they think something will happen soon, but because they understand how the system works. Life in the US is expensive, and when someone passes away, the financial impact doesn't stop. Funerals alone can cost thousands of dollars. Burial or cremation, cemetery fees, transportation, paperwork. Most families are not ready to pay all of that out of pocket. Life insurance helps cover those costs so the family doesn't have to struggle during an already difficult time. But funeral expenses are only part of the picture. In many American households, one person earns most of the income. That income pays for rent or a mortgage, groceries, utilities, health insurance, and childcare. If that income suddenly disappears, the bills do not stop. Life insurance exists to replace income, not forever, but long enough for a family to adjust. It gives time to grieve, time to plan, time to stabilize. This is why parents in the US often buy life insurance as soon as they have children, not for profit, not for luxury, but for protection. Debt is another major reason. America runs on credit: mortgages, car loans, student loans, credit cards. When someone passes away, some debts disappear, but many do not. A mortgage is usually shared between spouses. If one person is gone, the other is still responsible for the payments. Life insurance helps make sure the family does not lose their home. Young couples often buy life insurance right after buying a house. It's not emotional, it's practical. So why do young people buy life insurance? Because it's cheaper when you're young, because you're healthier, because you can lock in a low rate for years. A policy bought in your 20s can cost much less than the same policy bought in your 40s. In the US, life insurance is seen as early planning, just like retirement savings or health coverage. It's a responsible move, not a fearful one. Most Americans choose term life insurance. Term life insurance lasts for a specific period, usually 10, 20, or 30 years. It's simple, it's affordable, and it covers the years when responsibilities are highest. When kids grow up, when debts are paid off, the need for life insurance often decreases. Permanent life insurance exists, but it's more expensive and not necessary for everyone. That's why the majority of Americans stick with term life plans. Life insurance in the US is not a way to get rich. It does not promise a better lifestyle. It simply prevents a financial collapse after a personal loss. It keeps families stable, it protects homes, it covers essential expenses. Americans don't buy life insurance because they expect to die. They buy it because life is unpredictable. In the United States, life insurance is not about death. It's about responsibility. It's about planning. It's about protecting the people who depend on you. For many Americans, life insurance isn't emotional. It's a practical decision, one that helps families stay financially stable when life changes.